Alright guys, so in this video I want to break down what actually is happening in crypto, why is the market so painful, and more importantly, where I think Bitcoin is going to go next. Because so many people are confused, like deeply confused right now. Altcoins have been bleeding for over a year. People are starting to think the cycle might be over. And not just that, a lot of traders are starting to get shaken out of the markets. But if you understand two things, then you'll understand what the market is doing. And that's macroeconomics and liquidity. Because when you know those two things, then the market starts to actually make sense. And not just that, more importantly than that, it kind of gives us a way to be able to know where the market is going to go, which gives us a lot of opportunities. So let's get right into it. I want to start with a big picture macro environment. So on my whiteboard, you can see crypto 2026, okay? And there are two things that are happening right now. Don't mind me, I'm left-handed, so oopsies if I fuck some shit up. But we have two things that are happening right now. We have war, and what comes with war? Geopolitical tension, okay? So I'm gonna just say niggas hate each other. There we go. And the biggest thing with war is historically is that oil prices rise. So now when oil prices start to rise, something very, very predictable happens in the market. And not just the market, but the overall global economy. And that's inflation rises. See, now this happens because of one thing. And that is because oil is basically the backbone of like modern society. But not only is it the backbone of like modern society, it's the backbone of like logistics, right? Stuff like that. I spelled logistics completely wrong. Wow, terrible spelling. So we have logistics. We also have production. See, now when you have a combination of these two things, plus all of this, then a bunch of shit rises. You have transportation, for example. I'm not going to write that down, but you have transportation. Let me think what else you have. You have manufacturing costs, shipping costs. Shipping costs is a big one. Remember this in your head. We got like child slaves in China, okay? That they get higher wages, or actually probably less wages, but cost more to use them. Shipping, so like sending your mail, slows down. Prices increase for it, stuff like that, okay? So the point I'm trying to get at here is when these prices rise, they don't only transfer onto the companies, they transfer onto the consumers because you guys are starting to pay more. We are paying more for the same things. And in turn, with all of that happening, what does that equate to? That means literally everything. I'm gonna write this down here. Everything is more expensive. Every single thing becomes more expensive because oil is literally the backbone of society. And now that I've just explained that to you, you understand inflation now. Now here's where everything comes together and kind of becomes important for financial markets and traders like us. You see, when inflation, we're just gonna call it inf, okay? When this rises, central banks and especially the Federal Reserve have to respond. So to write that down, here, we're gonna call the bank, right here, we're gonna call this the bank. They have to respond. And what ends up happening? They end up responding by tightening financial conditions. So we're gonna draw like a little yarmulke here. Jew, not anti-Semitic, don't kill me. So, to reinstate what I just said here, when inflation rises, that means interest rates also rise, which then makes liquidity drop or liquidity low. Now, liquidity is probably the most important concept you can know as a trader. And not even as a trader, maybe just as an investor too. And the reason for that is because liquidity basically represents the amount of money that's flowing into the financial system. So as you can see here, liquidity equals the money that is literally flowing through, so I'm just gonna like draw like this, flowing through the financial system. So now imagine this. Imagine that's the financial system. When liquidity is high, that basically means a shit ton of money is flowing through into the financial markets. That also means money's moving fairly easy into these markets. Now on the contrary, when liquidity drops, that means that, yo, shit's tightening up. They're defensive. They don't really, they're unsure if they should put their money there. That was a backwards question mark, oops. They're unsure if they should put their money into these markets. And when that happens, risk-on assets get hit the absolute hardest. So now you're probably like, yo, Bilo, what the fuck is a risk-on asset? Don't worry, I got you. A risk-on asset is normally one of these things, okay? So crypto, 100%. Growth stocks, yes. Tech, yes. And speculative assets. You see, now all of these are assets that perform really, really well when investors and people are willing to put money into the financial markets. So that's when liquidity is high. But you see, when liquidity lessens or tightens and inflation rises, then people, like investors, they start to move their money to safer assets. Safer. And what I mean by safer assets could be gold, right? I said cold, I meant gold. Or I wrote cold, I meant gold, okay? What else? Cash. Right? Which is the dumbest thing in the world. Bonds, and overall just commodities. So naturally, given all of that, crypto becomes like one of the first markets to actually feel the pain. And this is exactly what we've been seeing over the last year. Now here's the interesting part though. Despite all the macro pressures, what we've actually seen in the crypto market so far is a lot less, what's the word? What I'm trying to say is what we've actually seen in the crypto market so far is relatively small compared to last cycle. Or maybe not even just last cycle, but previous cycles as a whole. And that's why I personally believe we still have one final move before we actually reach the complete bottom. Now let's zoom into Bitcoin specifically. I think that's what the Bitcoin logo looks like, but I'm not too sure because I don't really care. But anyways, you see why I'm looking at Bitcoin is because Bitcoin is basically the market's leader. It's like Benjamin Netanyahu almost. People just blindly follow him. So Bitcoin's the leader. Now every single cycle historically follows this pattern. First, Bitcoin bottoms. Then Bitcoin rallies. Then something else happens. Liquidity rotates into altcoins. And then eventually we get something called alt season. And alt season is simply when altcoins outperform the top 10. What do I mean by the top 10? I mean like the top 10 cryptos. Like when you think about it, like Bitcoin, Ethereum, XRP, Solana, stuff like that. But you see right now we're not in this phase yet. We're not in alt season. We're still in this phase right here. We're trying to establish if like Bitcoin's hit the low. You see what we're currently seeing right now is something called the accumulation phase. Let me write it down for you guys. Accumulation. I have no idea if I spelled that right. You see the accumulation range or phase, whatever you want to call it, is basically the time in the cycle where smart money like the big banks are slowly buying into crypto. And while they're doing that, retail investors like the average traders are still fearful. So to visually show you guys, the banks are buying. Whereas the people, they're scared. I don't know how else to draw scared. So I did like a heartbreak. See now during this phase, price tends to move sideways. But not regularly sideways, it likes to move sideways with extreme volatility. So when price normally moves sideways, it moves sideways like this. But in the accumulation phase, most of the time it ends up moving like this. And that's why most traders end up getting shaken out during this. It's designed to actually like, fuck you. You see, and when price moves extremely volatile like this to the sideways, it's a lot of fake breakouts and breakdowns. In other words, I like to call it a Jewish fakeout. Just to recap in case you don't know what a Jewish fakeout is, it's when price is trending one direction, and it fakes a sweep and it ends up reversing. And like I briefly mentioned before, the basic goal of this phase is to transfer the coins from the weak hands to the strong hands. Now here's exactly why altcoins have been suffering so much throughout this period. You see, altcoins are liquidity dependent. You see, altcoins also require Bitcoin to have a strong environment. And if they don't end up having this strong Bitcoin environment, then they can't perform well. And if Bitcoin isn't rallying, then altcoins usually bleed. And right now, altcoins are sitting at a level which I like to call an all-time pain level. You see, altcoins have been on a significant downtrend for over 14 months. Dude, you know how fucking crazy that is? Big issue with not seeing a run in over 14 months is that basically pessimism is at an all-time high. Because when you're in pain for that long, people like they start to think like, yo, maybe this shit just isn't going anywhere at all. Like, why the fuck am I even in this? So people lose interest because imagine you're texting a girl, right? And then she's been getting dicked for 14 months straight by another dude. Like, you don't fucking want her anymore. So you lose interest in her. Just like people are losing interest in altcoins. So when they lose interest in altcoins, that means retail traders leave the market. So traders like you and I, retail. And when that happens, liquidity dries up. But ironically, that's usually the environment where opportunities like to showcase themselves. So now I want to answer the question everyone's been waiting for. And if you made it this far into the video, you kind of deserve to know. And that question is, where is the bottom? Now, before I go into this, I just want you guys to know it's not financial advice. I'm not a financial advisor. Please don't fucking listen to me. But I like to know what I'm talking about. Like, I do know what I'm talking about. But, like, you just can't listen to me because it's illegal. And I am not trying to go to jail, again. But anyways, let's dive right into this. You see, based on the current macro environment and the technical structures, I personally believe we could still see another 15 to 20% drop. And we'd have to make that drop in order to see the final low, in my opinion. Now, this isn't guaranteed, but it could happen. Because the markets like to cause maximum pain. They, historically, like it when they run you out of your position. It's just the truth. But if we look at actual historical data, Bitcoin likes to create one last final sweep before it actually runs. What I mean by that visually is this is a bad drawing, what I'm going to show it to you anyways. Let's say Bitcoin has been doing this, right? It made a fucking huge drop. And then it continues, and then people start to think it's going to run. It fakes you out, and it booms right down. And this is where you'd find the bottom. Because from here, once everyone stopped out, because they all went long, they thought they were going to fucking ride the whole way up, it says, nope. Not today, motherfucker. It's gonna shake you out of your position, and then from here, once everyone's wiped out, and only the banks and the big motherfuckers are in it, then it runs off. And it does whatever the fuck it wants. But now, if we were to apply that 15 to 20%, like I said, to like today's current price, then this is where it would be. So that 15 to 20% equates to around 53 to 54K per Bitcoin, obviously. Now, could price wick lower than that? Yeah, 100 fucking %. Like, 51K is also possible. I wouldn't rule that out of the scenario. And the reason why I'm saying that is just because what I just mentioned. The market likes to overshoot so it can run you out of your position. So it wouldn't surprise me if we saw something like 51K for a very, very short amount of time. But anyways, generally speaking, I think anywhere in the low 50s is a perfect range to buy up, go long, whatever, but not financial advice, you know what I'm saying? Can't get caught lagging, but yeah, that's my personal belief. But the reason I'm saying that, again, is historically backed, and let me show you why. You see, historically, the best long-term entries happen when fear is at an all-time high. It happens also when alts get completely fucking destroyed. And the third thing is when traders think the market's actually cooked. Then the next question arises, and that question is, what happens when Bitcoin actually finds its bottom? And the answer to that is Bitcoin gets a boner. That's my unprofessional term for it, but the professional term is an expansion phase. See, now what happens in this phase is Bitcoin rallies like crazy. That's my rally thing, arrow. And based on everything I just taught you, what happens when Bitcoin rallies is that liquidity gets poured right back into the market. You see, and once Bitcoin's made its rally up, it starts consolidating, which moves sideways. And what happens when it moves sideways is that money, right, capital rotation, moves into altcoins. And then that's when alt season actually happens. So to reinstate everything I just said, Bitcoin bottoms, then it rallies, then you get alt season. But once again, we're not here yet. We are still trying to find this. We're still in the phase where the market's trying to figure out this. That means everyone that has weak pussy hands is gonna get fucking washed out. It's like that one saying that every fucking black guy in fucking Atlanta has tattooed on their chest. Only the strong survive. Then they have some fucking like tiger or lion on it, or a fucking gorilla. It's okay, I mixed. But you see, right now, there's an emotional environment being created where people are starting to quit. And they're quitting right before the big ass opportunity occurs. So if you're feeling frustrated with the market right now, dude, it's fucking normal. I'm pissed at the market right now too. But once again, we have to look at history because history literally teaches us everything when it comes to crypto. And historically, most bottoms form when there's maximum boredom and maximum pain levels, which is exactly what the crypto market feels like right now. But in summary, watch oil, watch inflation, watch all these things so when you know when this bottom forms, when this rally is gonna happen, and when this alt season happens so you don't miss it. So you can get fucking rich, bro. Because the one thing people don't understand is if you get into alt season at the right time and do it correctly, bro, you can walk away with generational money. Now there's some evidence suggesting that this cycle's alt season isn't gonna be as strong as previous cycles, but I wouldn't be too worried about that right now because, yo, bread's bread. But yes, in the meantime, watch the wars, look what's happening in the news because all of this affects crypto. Let me know if you guys enjoyed this style of video because I actually enjoyed making it and walking around my fucking room doing this shit. Anyways, if you want to learn how to trade crypto for free, just click the link in my bio, I'll teach you for free. If you want to work with me one-on-one, then that's a separate thing, but you can book a call in the bio. Just hit that link, choose a time that works for you, and me or my team will join on that call and we will talk to you. But other than that, thank you guys for watching. I appreciate each and every single one of you. Don't be gay and don't get bombed by Big Net and Yahoo.